Hi, Harry Dent here with the Rant on June 3rd. First, let's start with stocks. Stock market, I am increasingly convinced, has made that major top that we've been looking for, but it is not a slam dunk yet. Normally what we see, and I've analyzed every major bubble crash in the last 120 years, the first crash tends to be rapid, and it's 28% up to 50% in the first 2 to 4.5 months, okay? So this is not quite fitting, but close enough, or getting there really quickly. So the NASDAQ's been down 32%. I see almost no chance that's gonna make a new high. So that means we've seen a top very likely. The S&P only 21%. So we've seen a wave down into March, a bounce. I call that a one wave down, a two wave bounce. Then we saw a third wave down into May here recently, and now we have a fourth wave bounce. It looks like to me, and it shouldn't go much higher here, one more wave down to new lows, and that would give us confirmation. We'd be getting closer to 40% down on the NASDAQ, closer to 30% on the S&P. That starts to look like a confirmed first crash. Then it gets easier to predict the rest of this trajectory over the next couple of years, which again, you know, is going to be the crash of our lifetime, is what I am forecasting. So that's the stock market. Of course, that brings up the treasury bonds. You know, that is our safe haven. You know, the gold bugs say it's gold. I'm sorry, 2008 already proved them dead wrong on that when gold went down almost 50% at the worst of the crash. So it's the treasury bonds, the safest long-term, and the U.S. treasury bonds better than other governments, because we're still the best house in a bad neighborhood and still the leading currency and country in the world. So right now, you know, a lot of people are positioning, as we've advised, TLT, ZROZ, or the ETFs, 20-year average treasury bonds for TLT, 25-year for ZROZ. And of course, the best thing to do is buy 30-year treasury bonds if you can do that with your financial advisor. But that's the real defensive play. Now, this is always slow to happen. The treasury bonds appreciate a bit at first when it starts to look like we're crashing, but they really show their stuff when things get really bad. And that was like mid to late 2008 in the last big crash. And the treasury bonds went up 40% plus. And this time it could be 50% or more. So that's the place people are trying to position, and the markets are testing this. The rates just went up on the 10-year treasury to 3.20%. I think that was a top in rates. They came back down to 2.73%. Now they're pushing back up near 3%, a little over again. I say people who bought the TLT or ZROZ or treasury bond, hold on to this. The tops are difficult. This is what will pay off the most. In fact, the only major investment that will pay off if this crash continues and we do see this crash of a lifetime. And remember, my targets, say by the late 2023 or a little later, down 86% on the S&P 500, 92% on the NASDAQ. Now, I may change that, but that's what looks like the best target. This is not a correction or a downturn to sit through. We may never see highs at this level in stocks, and even less so in real estate adjusted for inflation. So this is the time for people who have not gotten out to be more decisive. And this is the place you can sell. If we do see this one more wave down, which I do expect, there will be a more sustainable bounce after that. That'll be the last chance to get out. I say now is the best time if you're not out of stock. So I will keep you updated.